Welcome to the Skilled MBA Finance Case Study Series. Today we spotlight IG4 Capital, a pioneering private equity firm transforming how investments are made in Latin America. IG4 Capital integrates environmental, social, and governance (ESG) principles into its core strategy, going beyond financial returns. Their approach centers on operational transformation, ensuring not only sustainable growth but also positive societal impact. By aligning profit with purpose, IG4 Capital is redefining investment norms in emerging markets and setting a new benchmark for responsible investing. This case study offers key insights into the future of finance, where impact and performance go hand in hand. IG4 Capital, founded in 2016 by Gustavo Bufera and team, has swiftly expanded across emerging markets. With 7 global offices and 52 professionals, they manage $1.7 billion in assets. Their approach combines global financial expertise with a profound cultural understanding of Latin American markets, setting them apart in the private equity landscape. IG4 Capital is a United Nations Principles for Responsible Investment signatory, integrating environmental, social, and governance factors into investment decisions. As a certified B Corporation, it upholds high standards of social and environmental performance. With over 20,000 employees in Latin America, IG4 Capital fosters significant positive impact through its portfolio companies. Special situations often involve aggressive, high-risk strategies like distressed asset acquisition and complex restructurings. IG4 Capital redefines this by focusing on deep operational engagement, cultural sensitivity, and robust sustainability frameworks, transforming venture capital into culture capital with a focus on long-term value creation. Environmental, social, and governance integration offers a competitive edge by identifying undervalued assets in infrastructure, healthcare, and education. Through governance reforms, environmental compliance, and social initiatives, IG4 demonstrates that sustainable practices not only enhance ethical standards but also drive superior returns in emerging markets. Acquiring a distressed infrastructure asset presented challenges like operational inefficiencies and environmental compliance issues. By implementing governance reforms, environmental remediation, and workforce development programs, we modernized operations. This approach led to a 30% improvement in operational efficiency, a 25% reduction in environmental footprint, and the creation of sustainable local employment. Both Fund I and Fund II have consistently outperformed traditional private equity benchmarks in Latin America. This success is attributed to their robust financial strategies and commitment to strong environmental, social, and governance credentials, ensuring sustainable growth and responsible investment practices. IG4's impact metrics reveal significant achievements. Portfolio companies have reduced their carbon footprint through environmental programs. Job creation has surged across Latin America, driven by company growth and expansion. Additionally, corporate governance ratings have improved post-acquisition, reflecting enhanced governance practices. Fund III's strategic considerations include global expansion into emerging markets beyond Latin America and sector diversification into emerging technologies. Enhanced frameworks for measuring social and environmental impact are crucial. Additionally, forging larger partnerships with leading institutional investors globally will be pivotal for sustained growth and impact. Reinforcing ESG principles as a market differentiator can attract forward-thinking investors by integrating robust frameworks. Balancing financial performance with social purpose requires advanced measurement systems. IG4 must decide whether to deepen impact metrics in existing markets or expand geographically, considering strategic growth and the potential for enhanced social and environmental impact. IG4's strategy in Latin America effectively addresses social inequalities through inclusive investments, while navigating environmental challenges for sustainable development. Strong governance improvements unlock value and foster stability. Meeting infrastructure needs and transforming healthcare and education sectors are crucial. Success requires understanding local contexts and regulatory environments to deliver positive change and financial returns. Private equity can integrate purpose with profit, challenging the notion of trade-offs. Operational excellence, through deep engagement and transformation, surpasses financial engineering in complex markets. Cultural intelligence, including sensitivity and local knowledge, is crucial for success in emerging markets, emphasizing relationship building over traditional analysis. ESG improvements can boost returns, especially in markets ripe for operational enhancement. Sustainable capitalism demands a long-term view, focusing on generational impact over quarterly gains. Early adopters of purpose-driven strategies are securing competitive advantages, setting a challenging benchmark for traditional investors. The private equity landscape is evolving with increased stakeholder expectations for measurable social and environmental impact. Regulatory pressures demand greater environmental, social, and governance compliance and transparency. Investors are seeking opportunities that align profit with purpose. Technology advancements are enabling more sophisticated impact measurement, enhancing the ability to meet these demands effectively. Reflect on how environmental, social, and governance principles can reshape investment strategies in your region. Consider lessons from IG4's approach applicable to other sectors. Would you invest in a firm redefining capitalism through culture and environmental, social, and governance? Thank you for joining us at Skilled MBA. For further insights, contact Skilled MBA at support@skilledmba.com or visit our website.